Nigeria is going cashless and the government is intentional about it. All of this is for the purpose of tax. People should no longer go to their app, transfer money without narration. People should be able to narrate money. From 31st of March 2027, you're going to see multiple tax cases, particularly on companies, high-ranking individuals with good net worth and all of that. There's going to be prosecution. So people should pay their taxes. If you are helping someone with a transfer, state it there is an assistant. If it's a business startup, you want to help a relative, you want to help a friend, you're giving out money, say that money is startup. Because there are exemptions on all of these expenses. If my salary throughout the year 2026 is 800,000 and below, the Nigerian Tax Act 2025 said I should not be taxed. But that does not mean that I should not file returns, because it's in filing those returns that the authority gets to know that, oh, this person put together his salary throughout the year 2026 is 800,000. There is no mention of the local government in the constitution. So the local governments in Nigeria have no power whatsoever to take any form of tax from anybody. I see a 2027 where we're going to have multiple tax prosecution in court.
Hello everyone, and welcome to another episode of the LJE 360 podcast, a circle of insights and perspective where we discuss issues affecting life, society, business, education, and everything in between. I am Cecilia Memeh, your host, and today we will be discussing about a topic that is very urgent for Nigerians: the 2026 tax reform. With the deadlines fast approaching, it is crucial for individuals, entrepreneurs, small business owners, and larger companies to understand what this reform means, how it affects them, and what they must do to comply. To help us navigate this, we have with us Dr. Ochenehi Dominic, a senior tax law lecturer with the Bingham University, who will break down this reform, explain the different types of taxes, the responsible agencies, deadlines, and the practical steps Nigerians need to take. Welcome to the podcast, Doctor.
Yeah, thank you, Mrs. Memeh.
How are you doing?
I'm fine, thank you very much.
Okay, So before we begin this conversation about taxation, I just want to ask a question that might seem out of the box. How does it feel being a lecturer?
Being a lecturer for me, it have to do with commitment.
Okay.
It have to do with dedication to work, and specifically that you are interested. It's not everybody who will want to teach.
Okay.
Those of us who get involved in the teaching profession is because we are interested.
All right.
We're actually not there because of the money. So bulk of the lecturers you see, any true lecturer see himself like someone who is called to a vocation.
Okay.
So being a lecturer, it comes with commitment.
That's a thing of passion.
Yes, yeah.
Because recently, I think online, something trended where a lecturer posted his payslip from a notorious private institution, and there was a lot of noise online with a lecturer of this caliber will be receiving this amount, considering the fact that most of these private institutions, they actually collect a bulk sum of fees. But for myself personally, I was like, teachers generally, they are not accorded the respect that profession should get. But I think for most of them, like you mentioned, aside of the money, it is the passion. So for most lecturers, I think, like you mentioned, they do not look at the pay slip, but the commitment and the interest in the importance of passing knowledge from one person to another.
Yeah, that's just like you mentioned. If lecturers across Nigeria would share what they take in salary, you will be shocked. So for me as a person, it's not about the pay, it's not the salary. If you look at the salary, tendencies are very high that you will not even want to go to work. So like I said earlier, it's a call.
Yeah.
You must be interested. You must say, oh, this is what I want to do. I want to teach. And then when you go to work, you don't look at how much you are paid, but you look at the people that you are building. For me as a person, My specific and the height of interest is because of I see young people pass through me, I talk to them, I teach them. To be a lecturer does not mean only that you go to class and teach. It has to do with talking to them, counseling them, talking to students, and so many other things. It's not about money. Anybody who wants to join lecturing in Nigeria, particularly in our universities in Nigeria here, if you look at money, you will not be able to do anything. So for those of us, particularly for me, it is not about the money. It is about what I'm able to do. I derive bulk of my joy as a lecturer from seeing that those who came in 100 level, they're able to move to 200 level, graduate from the school, 2, 3, 4, 500 level, go to law school, become lawyers. When they become lawyers, I saw a student of mine recently at the High Court in Abuja here, and I was from nowhere. This is somebody we are not very close, but somehow you could see the joy. I was happy that this lawyer that is working from the other side in the same case is my product, and I was very happy about that. And I think that is the joy, not necessarily the money.
Thank you for being an instrument of impact. So let's get straight into the conversation that brought us here. So for some of our listeners, they might be hearing of this tax reform for the very first time. So can you give us a clear overview of what this 2026 tax reform is about?
Okay, thank you very much. You know, the tax reform laws that we have now started sometime last year.
Okay.
Around mid-year, June, we got all of this passed into law, and the government arranged that the commencement for these new laws that were signed into, those bills that were signed into law mid-year last year in 2025, that it will commence from the 1st of January 2026.
Okay.
Basically, if you look at all of that, before I delve into maybe discussing those tax reforms, what are the laws that were made, what is expected of the individual taxpayer, what is expected of the corporate taxpayers and the rest of them, it will be good to understand basically what is tax.
Okay.
Tax, in its simplest form, it's a compulsory levy that the government imposes on individual persons. This levy is also imposed on incorporated entities.
Okay.
Incorporated entities are companies, are entities that are registered as companies. It could be business name, it could be limited liability company. It can also be an incorporated trustee. It can even be company limited by guarantee. Any form of company that is registered, it is potentially a corporate taxpayer, depending on the nature of their business.
Okay.
Taxes are also, after levying them on the individual taxpayer, on corporate taxpayer, it is also levied on transactions.
Okay.
Transactions that we have here and there are taxed. Though a lot of Nigerians do not know that their transaction most of the time is being levied. No matter how small, there is this element of tax there. And then the other element, those who pay tax in Nigeria, it's the assets. Tax is also levied on assets. When you have all of these things put together, we now say that it is a compulsory levy on these four persons that I have identified. It can be the natural person and it can also be an artificial person. It is compulsory that these four categories of taxpayers that I identified will have to pay.
Okay.
Not paying them becomes like it's a crime in Nigeria for not paying your tax. Now, before the tax reforms laws that we have in place, we have a lot of tax laws that we have in place. Multiple tax laws here and there in the states at the federal level. That is when we still have FRS in charge of tax collections in Nigeria.
Okay.
The government of the present administration came on board and they immediately constituted a tax advisory reform committee.
Okay.
And the reform committee, interacted with people, talked to the government, and then came up with these bills. The bills are executive bills because they emanated from the government. They originally came from the tax reform committee to the presidency. The presidency forwarded these bills to the National Assembly. When I say National Assembly, I'm referring to the Senate and the House of Representatives as executive bills. The bills went through all the necessary procedure any law in Nigeria will go through at the National Assembly, and then the president assented to it mid last year, and with an arrangement that it will commence January 1st, 2026. Now, I will quickly mention these laws that we have in place, and then I will talk about them one after the other.
Okay.
The first, number one, is the Nigerian Tax Act 2025. We have the Nigerian Tax Administration Act 2025. We have the Nigerian Revenue Service Establishment Act 2025, and then the Joint Revenue Board Establishment Bill 2025. Generally, these four bills that became law later on and assented to by the president were put in place basically to ensure that we have a tax system that is workable.
Okay.
In sincerity, I'm not a member of APC, and I'm not in support of what they do, particularly as to how the funds generated from our tax revenue are being put in place. I will be their supporter if the revenue generated in tax in Nigeria is put into its original use. The original use of tax, when you talk about tax generally, there are rationales why the government take tax. Tax are actually taken so that funds can be available to the government. In return, the government can also provide infrastructure. Infrastructure can be of so many kinds. It can be education, it can be a provision of hospitals, it can be security, it can be payment to our government officials, it can be provision of pipe-borne water, provision of electricity. These are some of the things that originally the rationale behind the government taking taxes to be able to provide all of these things. But if you check very critically, the question is the government actually using this huge revenue we take every year as a government, as a nation, from tax revenue? Are we actually using this revenue for exactly what
it was collected for?
Now, let's not discuss that. Let's just go basically into the questions you have put forward to me.
Yeah.
Now, these four tax reform laws that I mentioned, generally, they have a central idea before they were forwarded as bills to the National Assembly, before they became law. The general idea behind this tax reform is, number one, that tax exemptions be provided to small businesses, small, medium-scale enterprises, and the rest of them. The better you streamline tax revenue for businesses in any country, the better for that country.
Okay.
A lot of revenue in terms of tax revenue come from the small-scale businesses we see here and there. If you know how much the government raised from tax revenue from small-scale businesses we have in the country, you will be shocked. So the better these people, this category of taxpayer, the better for us in terms of even revenue generation, even our GDP, and all of that we generate as a nation.
Yeah.
So the central idea of the entire four bills is that there are tax exemptions for small-scale businesses. That is why the new tax law provide 25 million that there is tax exemption for businesses that are unable to generate up to 25 million per annum. If you cannot generate 25 million to 50 million as turnover, as the total sales as a company, you are considered to be a small-scale business person.
Okay.
And the tax that we have, the tax laws, the reforms that we have in place provide that some of these persons, some of these business persons that are considered to be small-scale businesses be exempted from payment of these taxes.
Okay.
Then another reason is that government is expected to provide clarity. If you check very well, till now, a lot of persons, even educated Nigerians, are not very familiar with the nature of tax, what is the government responsibility, what they should pay, what they should pay, how they should pay, what they should not pay, and how they should go about it. A lot of Nigerians, even the educated ones, even among our colleagues, lawyers,
very well,
they don't understand this. So the idea is that government should do everything possible to provide clarity so that everybody is clear as to the tax responsibility that we all have as people in Nigeria. Now, if you look at all of that, it also provides that they want the tax laws that we have in Nigeria. We have too many tax laws before the signing into law of the tax reform laws that we have in place. So the new tax laws tend to streamline. It tends to consolidate. It tends to make simple all our tax processes. It also tries to eliminate. It provides a measure of eliminating all these nuisances. I don't know if you have traveled from Abuja to places like Enugu or Benue. You will discover that as you travel from Abuja, assuming you go through the Lokoja axis, you will discover that as soon as you get out of that geographical boundary line between the Federal Capital Territory and Kogi State, there are people there called produce. They take money from people and they say it is tax. As you go drive into Lokoja, as you pull out from Lokoja, as you go into another local government, you see people there collecting tax. The state is collecting tax. The federal government is collecting tax. And you know, it becomes too bulky for the taxpayer to bear. So most of the time, he tends to run away. He evades the tax. He runs away from the payment of the tax because the federal government is asking him to pay. The state government is asking him to pay. Some other persons, even from the state government, come and ask for tax payment. People at the local government level come to collect taxes and the rest of them. If you ask me, let me digress a little bit. Okay. The local government in Nigeria have no right whatsoever to take tax from anybody. Okay. But will you say that position is true? It is not true, because virtually all of the local government areas in Nigeria are taking taxes from people.
Very well.
They don't have the power to take tax. If you look at our constitution, the power to take tax is vested only on the now NRS, that is the Nigerian Revenue Service. That is what we have replaced, that have replaced
the FRS.
The FRS. Yeah. And then at the state level, we have the various state boards of internal revenue. In some states, they have various names and the rest of them, but I tend to refer to all of them as revenue generating.
State Inland Revenue Service.
Yes, that is what they do basically. But in some few states, they change the name and the rest of them, but they perform the same functions. Okay. So why do we have a situation where we have multiple people taking taxes at the state level? You come to the federal government, the same thing is happening, and then at the local government, we're taking. If you look at the constitution, it is the state and the federal government that have the constitutional power to take tax.
Okay.
What the local government can actually take, they can take maybe levies. You know, markets, radio, television levy, and ground rent, tenement rates. The local government can take. But because it is money, it is a money generating venture, they all go all out and then take money from people and all of that. So these new laws that we have in place tend to generate. If there is nothing the present government have done, I will praise them on the tax reforms that they have put in place. Mm-hmm. But the idea is this: if these very beautiful laws that they have put in place, they will be able to implement
them.
And if we're able to implement as a nation this very fantastic law, if the government will use the money generated from this tax revenue to actually provide infrastructure for the citizenry. But most of the time, the opposite is the case. Government take money from tax revenue and then they disappear with it. Somebody steals the money, embezzles the money, they take the person to court, and before you know, nothing will come out of there, and then the money goes. Okay. And then we keep taking the money here and there.
Okay, so Dr. Dominic, you mentioned something. You said this new tax reform is actually a very beautiful innovation. But from what you said, do you think this new tax reform is going to do away with the issue of multiplicity of taxation that we've experienced from previous laws? Because there's the issue of taxes overlapping, from the federal government to the state government, and like you mentioned, the local government is not even supposed to take tax, but they go all out to take these taxes, and citizens do not know what to pay, who to pay to, and where to pay to. So do you think this tax reform is going to take that away, or we're still going to continue experiencing paying multiple taxes on the same thing?
Well, I understand your question, and I understand the idea. This idea you have put forward is not just an issue with you. It is a general problem with every Nigerian. Now, multiplicity of taxes has been a very big problem to our nation.
Okay.
Take, for example, where we are presently. Someone will come and tell you they are from this, they are from that, you're expected to pay this. Another one will come, another one will come. It is normal to become frustrated with what everybody coming to take money from you and the rest of them in the name of tax. As the multiplicity of taxes is a big issue. It creates a situation where people tend to run away from tax evasion. They run away from payment of tax. I agree with those content that we have as our new tax reform laws, that if they are followed according to what we have in place, it will do away with tax multiplicity.
It's going to cure it.
It's going to cure tax multiplicity where people just keep coming to take tax. It will cure it. But you know, the issue is we Nigerians have beautiful laws. We have too many laws. Our biggest problem as a nation is implementation of this law. We don't implement them properly. We put them in place, no matter what happens, we spend so much money to put this law in place. That's implementation. Concerning tax, because it involves revenue, it involves money. My question has always been that if we're able, we have a fantastic law, I can tell you that. We pressing towards seeing how we can implement. If you talk to me concerning implementation, I'll tell you, yeah, the government is making effort concerning implementation.
Okay.
The FRS have changed to NRS. The JTB has also changed to a separate name and all of that. All of these things are being put in place to ensure that we have a situation where the tax is done properly. My fear, my biggest fear, I will tell you, Mrs. Memeh, is that will the government, because the government is going to generate up to times 10 of what we generated in tax revenue in 2025. Wow. The government will generate that with this there. The government will generate times 10. You will see that. I'm going to be updating you by the first quarter. The government will give the NRS, that's the new NRS, will give like an update of what they have collected so far. From the first quarter, if you compare to what we have collected in 2025 first quarter, you will discover that it will be even up to times 10 of what was collected in the first quarter of 2025. That means that ordinarily, when we go into the second quarter, the third quarter, and then the fourth quarter, we will collect as much as we can. But my biggest fear is, will the government be able to use that money and provide the infrastructure, basic amenities, provide us with security and the rest of them? I am a Catholic.
Okay.
When you go to my church and you say, oh, you meet the priest or whosoever is in charge there, and you said, oh, please, I am donating this money for the medication of pregnant women in this church. The church will not use that same money for any other thing. It will be restricted to the pregnant women, that the person who made that donation specifically identified that this is why I'm making this donation. Now, if we pay taxes and the rest of them as Nigerians, will the government be able to use? Because the reason why the government is taking taxes is not to embezzle the money, is to provide us roads, provide us hospitals, provide us schools, provide security, provide us with all the infrastructure. You can name them. That is the reason, not any other thing.
Okay.
But so long as the government cannot do that with all the money that will come out from tax revenue, then I'll be disappointed.
Okay, so Dr. Dominic, you mentioned that local governments are not meant to collect taxes, but they are expected to collect levies. Recently, I saw something trended on social media that has to do with television levy. I think that's like a tax for
television rate.
Yes, for having a TV in your store or something. And that particular incident brought to the limelight that there are so many levies that we do not even know about. Is that a viable levy that is meant to be collected, or these local government officers are just walking into different stores, walking into different places, and just telling people to pay? These levies, are they really remitted? One, are they rightly collected? Are they meant to be collected, or they just go to anywhere they feel like going to and then tell them you're meant to pay? Because that was the first time, in all honesty, that was the first time I heard about paying a rate for owning a TV. Now, what is behind that?
No, when I was talking initially, I had mentioned those taxes, those levies. I don't want to call them taxes. The local government have no power constitutionally. The federal government and the state government we have in Nigeria, including the Federal Capital Territory, have its power from the Constitution.
Okay.
Now, if you check, there is no mention of the local government in the Constitution. So, straight on, the local governments in Nigeria have no power whatsoever to take any form of tax from anybody. Okay. Now, the scenario you mentioned that trended on the social media, that local government tax officers going around and collecting money from people because they own television. You know, the usual thing in Nigeria is that government officials tend to abuse.
Okay.
Government officials tend to abuse, the powers that they have. If you allow me, I will quickly itemize. The local government can take levies. They talk about television rates, television levy.
Okay.
It does not mean that it's collected from the people who own the television, who own televisions in their houses and in their stores here and there. No.
Okay.
That is the abuse we're talking about.
Okay, what is it meant?
It is expected to be paid by the television station owners.
Really?
Not by because I'm able to afford a television and then I have it in my store, maybe somewhere in my studio, maybe somewhere in a lounge where I just want to sell drinks. It's not for me to pay. It's not for those people to pay.
Okay.
The persons who are expected to pay this levy is that if there is a local government that is existing, and then there is a television station.
Okay.
The television station is expected to pay. If this television station operates and air within that jurisdiction, they are expected to pay, not the individual person who owns a television. Okay. But, our local government, they call them local government revenue committee. Okay. That's the official name for them. Local government revenue committee.
Okay.
In each local government, we have a government there, just like we have in the state and at the federal level. You have councillors. Councillors are the ones representing, they are the lawmakers representing each of the wards that make up that local government.
Okay.
Now, they are the ones who come as lawmakers, like we have the National Assembly for the Federation. We have the State House of Assembly for the state government. They are the lawmakers for the local government. So each of the councillors, there are some in agriculture. They will tell you this is the supervisory councillor for agriculture, supervisory councillor for revenue. I'm talking about the revenue. So he takes charge of these levies. Collect levies for the local government, remit them to the local government. The local government use this money to provide infrastructure for the citizens of that place. But do they use that? Most of the time, the local government, particularly, I am particular about the local government, they take the money and maybe divert the money and all of that, leak the money and so many things.
Okay, thank you, Doctor, for giving us a very good foundation to the conversation. Let's move on to the next phase. Can you explain the different types of taxes under this reform?
Yeah, the different types of taxes the types of taxes we have does not necessarily have to do with only these reforms, but they also are synchronized into the reform. We have taxes that are direct. We have taxes that are indirect. We have taxes that we say that they are proportional tax. We have taxes that are retrogressive. We have taxes that are proportional. We have taxes that we say, oh, this tax is ad valorem. And then when you go away from this explanation I have made, we have corporate tax. These are taxes that are paid by companies. Now, we have the corporate income tax. There are taxes that are paid, this type of tax is paid by companies that all registered companies in Nigeria are expected to pay this tax. We have the petroleum profit tax. The petroleum profit tax is also more or less the company's income tax, but it is paid only by companies that are into the upstream and the downstream sector. Those companies that are
oil and gas companies.
They don't pay the company's income tax, but they pay the petroleum profit tax. They are exempted from the company's income tax, but they must pay that. The government try to manage so that you don't have a situation where there's this very negative language you have in tax law, double taxation. So that you don't pay as a company because they are also companies. You don't pay here and then pay there. Like in Nigeria, bulk of the people who pay are those who are involved in the oil and gas sector. Particularly the IOCs like Shell, SPDC, Chevron, Total, Final, Elf, Mobil, ExxonMobil, all of those people, they pay because they are in the oil and gas sector. Other companies who are into other general things and the rest of them, but they're a company, they pay the company's income tax. Now we have the VAT. The VAT is the value added tax. It is on services. It is on services and then on products that it is considered improved upon. Now, this place wasn't looking like this initially. You improve this place. You know, this place is looking very beautiful. It means that you have improved the place. Now, when I was offered water when I came into the studio earlier. If you look at that water, and the water we have in my village is not the same, but they are all water. Because this has been probably refined, that's what they will tell you, packaged, you know, the bottle is looking nice, it has a badge, it's corked,
branded, well branded.
It's branded. So you can see the water in my village is not the same thing with this water that I'm offered here. Now when you buy this water, because it has been improved, there is an improvement on it, you're going to pay VAT on it. It's basically on products and services that there is improvement on them. If you drink the water in my village, you're not going to pay any VAT because there is no improvement on the water. I had gone to just fetch directly from the waterfall and drink my water. That satisfaction that water I got directly from the waterfall and the one packed will give to me is the same thing, all of that. But because this one is improved upon, you know, if, for example, you walk into a restaurant and I was at a restaurant the other day, a client of mine asked me to see him. We met and then he wanted me to go for lunch with him. And then we went for lunch. And then he took me to a restaurant, it's around the Minister's Hill. And then we went there. I can't remember the name of the restaurant exactly. And I do not want to advertise for them, actually. Now, we went there. Nice restaurant. Beautiful place. Nice service. And then we ate the food that I would eat in my regular restaurant in my school for maybe 1,500, 2,000 or 2,500 at most. We ate there. And when he was paying, I noticed that he paid about 56,000. It means that food we ate is over 25,000 naira per person, per plate. But this is the same food that I would eat somewhere in a restaurant in my school for 2,000, 2,500. So VAT is going to be paid over there for the improvement they have made there. So you will pay. So most of the time, VAT is a tax that the burden can be shifted from the wholesaler to the retailer. The retailer also shifts. It's finally shifted to the final consumer.
Okay.
The final consumer cannot shift. So we have other tax. You can say a tax is proportional if it is progressive.
Okay.
Yeah. If I earn, for example, as a lecturer, if I earn 500,000 in salary, and you are not a lecturer, you work maybe here, and you are paid up to $1 million at the end of the month, we are asked to pay maybe 5% of that money. It is ad valorem. My 5% of 500,000 naira certainly will not be the same thing with the 5% of 1 million naira. So, but we are paying the same thing in the eye of the law.
Okay.
We are paying the same thing, but we are not paying the same thing in terms of figure and amount. But in the eye of the law, we are paying the same thing. So you can say such a tax is paid ad valorem.
Okay, so this progressive tax that you just mentioned, is it the same as what we know as pay as you earn?
No, they are not exactly the same. Pay as you earn is payee, is what we call payee.
Okay.
It's paid majorly by people who are in paid employment who take salaries every month.
So how do we differentiate it from the one you first mentioned?
Now, progressive, proportional, progressive. It means that the more you earn, the more money you have, the more you will pay in tax.
Okay.
The payee is basically on salaries.
Okay.
The proportional tax not necessarily mean that it must be salary. The proportional tax is that you have earned money.
Okay.
It can be from business, it can be from salary, it can be from sales of an item, it can be from whatsoever source. But the payee majorly is on salaries.
Okay.
I think that is the difference. So the proportionality here is that one will pay based on your earning.
Okay.
If I have earned 1,000 naira in the month of February,
Yeah.
when I'm paying tax, I should pay the tax that is calculated at valorem on 1,000 naira.
Okay.
The other person who earned 1 million should also pay at valorem the same tax but on 1 million. You can see that is not the same thing.
Yeah.
Take for example, if you take a car, if you go to a car shop and you want to buy a car, there are cars that are sold. If you want to buy a regular good car in Nigeria, with 12, 15, 20 million, you should have a fantastic brand new, all those small Corollas.
Yeah.
But if you want to buy a Ferrari, a Lamborghini, all those luxury vehicles, it runs into over 300 million, 250 million, if not more than that.
Yeah.
So when you want to pay tax, if you have money to buy a Lamborghini for 300 million, and I don't have such money, the money that I have is a 25 million and I want to buy a Corolla car, I will be asked to pay 7.5% of that 25 million, but you will be asked to pay 25% of the 300 million you want to use in buying Lamborghini. The law sees us as paying the same, but it is done at valorem. It's not the same because you're paying differently, I'm paying differently, but we're all paying 7.5 of the things that we can afford, the luxury we're able to afford.
So that 7.5, is it on the are we still going back to the value added tax?
No, 7.5, I'm trying to give an example on the value added tax.
Okay.
Each of these taxes you see, they vary depending. For value added tax is 7.5.
Okay.
And the government try as much as possible.
7.5 of earnings or income, or 7.5 of what? So that
7.5 of those things that you are able, the services and products you are able to purchase.
Okay.
There are goods and services that are exempted
Okay.
from particularly the VAT, value added tax. It's not every item, it's not every product that is vatable.
Okay.
There are goods and services that are exempted. For example, under the VAT Act, goods like basic food item, they are exempted because the government wants people to feed. Educational materials, books, magazines are exempted.
Okay.
Things like baby products used by children, kindergartens, are exempted. Fertilizers and imported tractors, plow, anything that is going to be used for agricultural purposes is exempted.
Okay.
And all veterinary medicine that are produced within Nigeria are exempted because the government want to
Encourage
production and activity in that area.
Okay.
As to services, medical services are exempted
Okay.
because the government want a situation where if someone is offering medical service on the phone, talking to our doctors, oh, you need to do this, you need to buy this, the person should do it tax-free, VAT-free. Things like community banking. The commercial banks pay VAT, but when you have a bank that is community-based,
Okay.
people's bank, they don't pay VAT. It's exempted because the government is encouraging people to have their community bank and people's bank. And then maybe lastly, mortgage institutions.
Okay.
Any mortgage transaction, yes, they are VAT free because the government want people to own their own houses and then pay gradually. And then if you have your own abode, you tend to settle down a little bit.
Still on this, but I have a scenario I want us to discuss.
Okay.
Let's say I go to a barbing salon or a hair salon. I'm going there to make my hair or to cut my hair, and I'm being charged VAT. Is it ideal?
Yeah, they provided you with service.
Yes.
So it's vatable.
So it is vatable.
Yeah, they provided you with service and you paid for the service.
Okay, so that is vatable.
It's vatable.
On the other hand, I go to a restaurant. I know you made mention of, you gave example with regards to restaurants. So now I go to a restaurant to buy food. After paying for the food, they added VAT. How are we going to distinguish the categories of maybe restaurants or some of these corporate entities that are meant to collect VAT or they are not meant to collect VAT? How do we know? Because I might decide to not go here because I know I won't pay VAT. And I might decide, oh, I'm going here irrespective of the fact that I'm going to be charged for VAT.
So I want us to hinge our explanation on exemption.
Okay.
Any item not mentioned by the law establishing the VAT is vatable generally,
Okay.
except the ones that are mentioned.
Okay.
Now, what do they sell in the restaurants? They sell food. Now, the exemption mentioned in the Act is on basic food. When you go to a restaurant and then you buy rice, you buy plantain, you tell them to give you salad. You ask them, do they have this, what they call shaki? Did they have fish? Did they have that? It's no longer a basic food item.
Okay. So
The exemption is on basic food item.
So now it is becoming clear. So prior to the cooking of that food, in its raw form, it is VAT free. But the moment it becomes improved upon, it has gone through a process, cooking, branding, packaging, and all of that. You must pay the VAT.
You must pay the VAT because it's no longer basic.
Okay.
It is basic if you have the raw food item. It can be, it's not just rice. I'm just giving an example
Just
with
an
rice.
example, yes.
It can be maize, it can be unicorn, it can be yam, but it needs raw states.
Yeah.
So long as it's a basic food item, it is tax exempt.
Yeah, because I know there is a bit of confusion. The moment people hear essentials, food items, they are VAT free, people expect that the moment they go out to those places, that exemption continues. But with this conversation, it becomes clear that the moment that basic item is improved upon, it is no longer exempted from.
It is no longer exempted. It must be in its basic states.
Okay.
Yeah, basic states. The guy who enters into a restaurant and said, I want rice, I want fish, I want this, I want that, and then before you know, his food is already 5,000 naira.
Yeah.
It's not the same thing. It's not basic compared to the guy who just came in and said, okay, can I have rice? I don't want meat. And then he's buying that rice for 500, 600, 700, 1,000. Obviously, he wants to survive. he can't afford the 5,000. So it must be in its basic state. A lot of Nigerians say, no, this is food, we're not supposed to pay VAT. No,
Okay,
not when it is improved upon. And all of that. Yes.
Okay, so just for the purpose of clarity, you've made mention of company income tax, you've made mention of petroleum tax that has to do with companies in the oil and gas sector, you've made mention of the value-added tax. I think you mentioned 7.5%.
Percent for the value-added tax.
The value-added tax. You also mentioned the pay as you earn. Is there any other
education tax?
Education. Is there any other tax that we've not mentioned in the conversation?
Some of them, education tax, just like I just mentioned it now. Education tax. We have the direct tax, the indirect tax. We have some of those things. Basically, those are the ones that I have mentioned.
Okay.
Yes.
So is there a difference? Okay, now I think I remembered one. The personal income tax. Is there a difference between that and the pay as you earn, or they are in the same category of tax?
The personal income tax. You can earn personal income tax if there are people who work.
Okay.
They earn salary.
Okay.
And they've created another business.
Okay.
They earn money from there.
Okay.
And they have gone into borrowing people money, and they said, I'm going to borrow you this 10,000 naira.
Yeah.
When you pay me back this money, you're going to add so amount of money on it. So the money generally generated, is what you consider to be the personal income tax, the income you have generated personally. Now, take for example a student who is in school, and his or her school fee sent to the student to pay. Can we now say that the student earned that money? Did the student earn the money? The student did not earn the money. The student only received the money and paid the school fees. And that is why it will be good to manage our taxes in Nigeria with the tax reform laws that we have in place now, that every transaction that we carry out, you must be careful. The Nigeria is going cashless, and the government is intentional about it. All of this is for the purpose of tax. They want to track tax to people and tell you that you must pay this, you must pay that.
Yeah.
Now, people should no longer just go to their app, transfer money without narration. People should be able to narrate money. Okay. If you are helping someone with a transfer, state it there is an assistant. If it is a business startup, you want to help a relative, you want to help a friend, you're giving out money, say that money is startup, because there are exemptions on all of these expenses. If you're buying food item for your immediate family, state that it is food item. This payment is for family upkeep. Okay. It's for the purchase of food. It's for the purchase of this, purchase of that. Whenever I make transfer, particularly issues relating to family issue, I specifically will narrate them, because some of them are exempted.
Okay.
When you buy food item for family, for your household, it's exempted. When you assist, it is exempted. When you're giving out gift to someone, it is exempted. But if you do not narrate these things, the tax authority would not be able to identify, to know exactly what, so it will now be your word against their own word, and all of that.
Okay, so these taxes that you've mentioned, are there any deadlines that you think people should be aware of with regards to the various taxes?
Now, normally, with what we have, every taxpayer is expected to file taxes.
Okay.
31st of March normally is the deadline that every company, every person who is expected to pay tax, such a person should pay the tax. There are some discussions around, they are not conclusive yet, around allowing people get aware and then try to give exemptions here and there so that people can, ensure that they're able to pay. Okay. Ordinarily, 31st of March of every year, everybody, it becomes due. Now, because we have started this year, the tax reform laws we have in place started this year, and the expectation is that it will run throughout the year. Okay. Companies are expected to pay, as well as expected to do their filings. If you are a taxpayer, go and do your filing. A lot of Nigerians run away from filings. They run away completely. But they don't know that
Don't you
can
think
actually,
it is because there is no clear understanding as to what they are to do?
Yeah, there is no clear understanding. I agree with that. The NRS will need to do more in terms of conscientization. They need to do jingle. They need to go. If you go to my mother in the village, when you talk about tax, she doesn't understand what you're saying. If you meet a lot of people, they don't understand what you are saying. And that is where I expect that the government will do proper conscientization through the NRS. That is the body responsible for the collection of taxes for the federal government. At the state level, the State Board of Inland Revenue should do a lot of conscientization. They should orientate the people. At the local government level, it's a holistic thing that they need to do so that people become aware.
So this 31st March that you just mentioned, is it for a particular type of tax or for all taxes?
For corporate tax particularly.
For companies?
For companies.
Okay.
Now what is expected of people now?
With the old tax law, what used to be the date? Is it still the same March 31st?
It's still March 31st.
Okay.
Yes. Now for what I would say concerning this deadline and the rest of them, the government is trying to, through the NRS, find a way of creating a situation where it does not become due. But, they are discussing it. It's not out officially yet until they are out and they are announced officially before you can work with it. So everyone should work towards that. Next year, 31st of March, it must, you must continue to ensure that there are information. Now, what people should do is that, particularly with companies, it is not compulsory that when you go to file tax return, you must file that you made profit. There are companies that in truth made losses in February, in January. But if you don't go to NRS and go and file these things, NRS will not agree with you. When they want to assess you, they're not going to agree with what you are saying. It is better to approach them and say, we want to do our filing. For the month of January, people appear not to have a lot of money. We didn't sell so much. We didn't earn so much. So there was no profit. In fact, we made loss. We made loss in the month of January. You file, they have the record. In February, we sold this. We made this profit in February. And you know what companies do not understand also in Nigeria concerning this new tax reform is that they don't know that the tax is not on the entire money in the company possession. It's only on the profits.
Okay.
You can have 10 billion, but the profit you made from that 10 billion, it's just 10 million. The tax is not on the 10 billion. The tax will be on the 10 million. But if we keep running away without going to the NRS to make those filings and the rest of them, when they want to, if you allow them to assess you, they're going to assess the whole of the money they can find in your account and the rest of them. They have access to our accounts. Leave the banks. The banks say, nobody can have access to your account. It's not true. The NRS can have access to individual accounts, corporate accounts, on the ground that they are investigating.
Okay.
Once it is done on the basis of investigation, the bank will make available those.
These filings that you just mentioned, are they annually, monthly?
Monthly. Monthly.
So the different types of taxes that you've mentioned are meant to be filed monthly.
They need to be filed monthly.
Okay.
And the NRS, the FRS before it changed name to NRS, it's they have created an online platform, the Tax Promas and some other associated platforms where you can sit at the comfort of your home and then send in these filings. But if you cannot do it digitally, the expectation is that there must be a tax office close by to you. The closest office to you that is accessible, you go there, there are hard copies. You take name of company, RC number, the business you do, how much you have made for that month, in profit, in turnover, you state all of those things. So when it is time to assess you, all of this information are available. You say, this company did not make any profit. The profit they made is this. And then they charge, they assess this tax based on what is available to them.
Okay, just for the purpose of clarity, is it that previously some of these taxes used to be annual filings, and then this new reform is now making it monthly?
No.
Or that has always been the case?
Yeah, it's always monthly filing, not
Always
annual. It's monthly filings.
So both individuals, businesses, companies,
Everybody should file monthly.
Everybody should file monthly.
For people who earn salaries, because you mentioned individual persons, for some of them, their organization would declare.
Okay.
Yeah, I'm a lecturer. I teach. I get salary from the university where I teach. So they relate with the responsible body in the state where I teach. And they tell them, oh, we have so number of staff. This person in this person in that, this person in that. And then they do the calculation and then it is paid. So I don't go to do normal personal filing.
Okay.
But situations where people people who are in business, people who earn money from here and there, it may be difficult, but I see a country where gradually we will get to that, we'll get to the place where people just walk into tax office. I was in Gabon some time ago, and my friend talks about going to pay his tax. He talks about it always. And then he will go and pay and come back and tell you he has paid his tax. Anytime they sold a family property, and the first thing they start discussing is that, okay, this property they have sold, the tax is supposed to be this. They went on their own to the tax authority and made this payment. You can't find that in Nigeria. Family will sell their property, or individual persons will sell their property. They hold on to the entire money until you start chasing them. Where is this money from? They say, oh, I sold this, I sold that. So it is good that for organizations and individuals who don't have a system in place to file for them, they approach and file on their own. But companies are expected to go and file on their own. They should do that monthly.
Okay.
Any of the NRS office that is approached and you say, oh, you are a company, you are the manager of this company, you want to do your monthly tax filing, they are happy to provide you with details, and then they put it in your file.
Okay.
Until it is a year, you want to take tax clearance, that's where all these questions will start popping up. So how much have you earned? I say, no, I've been declaring monthly. They check and say, oh, you have made so profit in this month throughout the year. So you see them indicating those details in your tax clearance before it is issued. If you don't make any profit, tax clearance is still issued to you because you have come monthly and declared that you don't make any profit. There are some tax clearance you will see with companies is 0,000 because they did not make any profit.
Okay.
So it is advisable that companies go to file monthly return.
Monthly return.
In filing monthly return, they automatically have their annual returns. And then individual persons continue to be sure that the organization you work for have paid. If they don't pay, you have a duty to go and pay. Yes, you have a duty.
Okay.
Yes.
Let's. Are there any financial thresholds with regards to maybe income for businesses, for companies, that determines what they pay as tax?
Now, if you flash back to our discussion, we had mentioned the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Establishment Act, and then the Joint Revenue Board Establishment Act of 2025. Because of this question you have asked, I will quickly take you to the Nigerian Tax Act 2025.
Okay.
That is the law that specifically talks about threshold. Now, this Nigerian Tax Act 2025, the basic reason why this law was passed is to correct all the confusing overlap that we have in the system.
Okay.
When I talk about system, I mean Nigeria as a nation and in the various local governments and in the various states. This law was passed to specifically correct the confusing overlap of the multiple tax laws we have in the system. Now, small businesses, for example, are expected to pay to either the federal government, state government, and local government those taxes that are, what I mean here is that those taxes that the federal government will come and take from small businesses, state government will come, local government will come. This law tends to correct all of those things. Now, this law merged all of these various type of laws that you have in place originally. It merged them into one simple and comprehensive legal framework. Now, for the individual persons, tax in Nigeria now under the new tax regime is progressive. Tax is said to be progressive if you pay, the more you earn, the more you pay. Such tax is said to be progressive. The more you earn, the more you pay. Take, for example, if my salary throughout the year 2026 is 800,000 and below, the Nigerian Tax Act 2025 said I should not be taxed.
Okay. Zero tax.
Zero. I should not pay any tax. But that does not mean that I should not file returns, because it's in filing those returns that the authority gets to know that, oh, this person put together his salary throughout the year 2026 is
800,000.
800,000. So people who earn 800,000 and below are tax exempt.
Okay.
They don't. Now, if you earn, for example, 2.2 million, anything above 800,000, between 800,000 and let's say 801,000
yeah.
to 2.2 million, that threshold, you're expected to pay 15% of the money.
Okay.
You're expected to pay 15% of the money in tax. And now, if you earn above 50 million annually, you're expected to pay 25% of your earning to the government. Now, for those who earn, or businesses or individual persons who earn between 25 million to 50 million, the expectation is also that they pay this 25%.
Okay.
So that's the threshold that have to do with it. So it's not everybody who pays. The lesser your money, the lesser the liability, the tax liability you're going to have as a person. So each of this law, if you allow me, I'll just quickly touch on this law, since we are now talking on the Nigerian tax bill. It talks about the threshold. Now, the Nigerian Tax Administration Act talks about that act, because a lot of people, I have a lawyer, very senior lawyer, who asked me, why is the government having 4 laws on tax? What's their problem? And I laughed and I explained to him, each of these laws tend to, each law, if you remember, you're a lawyer, if you remember in the interpretation, each law is put in place to achieve a particular mischief.
Yeah.
That thing a law is made to protect is the mischief. If because I go out every night and come back very late, and as a government you don't want me to go out every night and come back late, you just make a law and say, oh, nobody, once it is 6 p.m, nobody can go out. If you go out, you are breaking this law.
Yeah.
The mischief in that law is to prevent me and other people from going out late.
Yeah.
So each of this law, I explained to him what they tend to protect. Now, the Nigerian Tax Administration Act tend to streamline the entire process.
Okay.
It streamlines the entire process. It makes filing of taxes very simple. You can use technology. You can file from your home using the tax promax and other associated technology provided. This act also, this act tend to find a way of ensuring that there's a centralized way of collecting taxes. I give it to Enugu State. I'm not from Enugu, I'm from Benue. But recently, the Enugu State government passed a state revenue law that prevented the local government from collecting taxes. It is because they want to streamline their process. They say, no, don't pay tax to everybody, just pay tax to the state government. Now, when, for example, if I'm in Nsukka local government, for example, and I'm a taxpayer, The responsibility of the Nsukka local government administration is to ensure that they know what have been paid from their local government, not them collecting directly. The state collects for every local government in Ubolafo, in Udenu, in Enugu, in Igweze, and all of those local governments in Enugu. They don't collect taxes again. The state collects for them through the Enugu State Board of Internal Revenue.
Yeah.
And at the end of the day, the state remits to them because they want to make it simple. They want to prevent everybody going to collect tax. That is what they have tried to do there. Other states are trying to join. So for the Nigerian Tax Administration Act, what it seeks to do is to ensure that they streamline the process. They make filing of taxes simple. The laws seek to create a centralized means of ensuring that all taxes are collected easily. It also provides a friendly process of how everybody can file. So the Nigerian Tax Administration Act is majorly put in place to ensure that the process is simple. The Joint Revenue Board Establishment law seek to change the name of FRS to NRS. It changed the name. If you ask me, there was no need to change the name. It's how they work that they should change.
Yeah.
For me, I'm looking at the expenses on the part of the government. If you know how many FRS offices we have in this country, it means that the government will provide money, or FRS will now provide money then to go and change all the branding.
Yeah.
There was no need for change of that name, but there is need to change how they work. It's the same thing. They all belong to the federal government.
Very well.
But the government have a way of doing what they want to do. They change the name. So the Joint Revenue Board Establishment Act tried to change name and then to strengthen. The assumption is that the FRS have a weak system. So they want to strengthen that weak system observed with FRS. FRS is considered to be, it's seen to be ineffective. They want it to be effective. They want to change the JTB to RBI and the rest of them. They want to change all of those things to ensure that it is more effective and they collect more taxes. And then lastly, the Nigerian Revenue Service Establishment law, that is what changed the name.
Okay.
The Nigerian Revenue Service Establishment law is what changed the name of FRS to NRS. And basically is to ensure that all of these things are done in such a way that this is collected, taxes are collected properly, and it is distributed. The problem then before the new law came into force was that taxes are collected by today you see the federal government collecting taxes that belongs to the state government. The state government also will overlap and come and take taxes that belongs to the federal government and all of that. So the Nigerian Revenue Service Establishment Act tend to re-energize the FRS.
Yeah.
Now NRS, it changes the name. It ensures that there is a sharing formula. This law ensures that there is a sharing formula. When money is collected, how much will the federal government take? How much will the state take? How much will the local government take? I'll just give a rundown quickly on if taxes are collected by the NRS. The new law provides that 10% of the taxes collected by the NRS, that is the former FRS, the taxes collected by them, 10% will go to the federal government.
Okay.
Which is fantastic.
Okay.
Unlike when the federal government used to keep all of the money and share according to how they want to share it. Now, this law now said 55% of the total revenue collected by the NRS goes to the state government.
Okay.
Now, 10 plus 55 will give you 65%. Now, the remaining 35% will go to the local government.
Okay.
Now, this money will be made available to the state government and the local government so that they can be able to carry out their functions. So if you check, the state government are taking more money from revenue collected by the federal government.
Yeah.
The federal government keeps only 10%. 55% goes to the state and 35% goes to the local government. So if you ask me, if they will respect and distribute this money following this sharing formula.
It's actually a very good one.
Yes.
A laudable initiative. Okay, before we go, Doctor, are there any tools or software that can help taxpayers stay organized and compliant?
Yeah, there is a tool like the Tax Pro Max.
Okay.
There is a tax calculator I was going through the other day. I'm not a mathematician, I'm a lawyer. I also observed there is this chartered accountant from Lagos who is on the social media, he's teaching people how to calculate their taxes. If your money is 10 million, this is what you should pay for this, that's what you pay for that. Yeah, there are. But the best place to go and get this calculation is to use the system provided by the NRS.
No.
The NRS is the official regulating body, official body collecting tax revenue for the federal government. They have, if you go to their website, it's there. You could, use all of that and then check.
Okay.
In terms of calculation of what to pay, what not to pay, it is better. A chartered accountant who practices tax can also be consulted.
Okay.
And some of us that are tax practitioners, we can be consulted, and then it is calculated. Once you calculate it, the answers are there.
Is there very clear? Okay. How can businesses and individuals track their income, their bank flows, and their expenses to avoid errors in tax filing?
In tax law jurisprudence, there is what we call tax management.
Okay.
That's what we also call tax evasion.
Okay.
Tax evasion is a crime.
Okay.
It means you're running away from the payment of tax.
Okay.
But there is the other hand of it is that it's called tax management. It's not evasion. But in tax management, what businesses are doing is that they pay lesser than what they should pay ordinarily because they are managing their taxes. The first is illegal.
Yeah.
Managing your tax is not illegal, it's legal.
Very well.
That's what we call tax avoidance.
Okay.
Tax avoidance, tax management is the same thing.
Okay.
Tax avoidance may appear not good, but it is legal.
Okay.
Tax evasion, it's what is illegal. Now, these are what a lot of companies, what they do is that they ensure that they track their expenses. Take, for example, because I am here to participate in this program, you give me water to drink, you purchased the water. We have an AC running here, making the place look conducive. You did that to be able to have a nice environment here so that you can work easily. If there is no AC here, it does not mean that you cannot work. You will work. So in some of these things, there are company staff that may be ill. The company can just go and say, oh, we want to pay your bill, your hospital bill. You're such a very hard-working staff. Now that you are sick, what is your bill? They pay the bill. You can just wake up and say, oh, our company today, we want to go to the estate gates and we want to give to all of the security staff today proper meal. You give them this meal. You can go to the market and say, you want to do this, you want to do that. For when any company continue to keep those records, you're managing your tax.
Okay.
Because the expectation is that when you assist, you are able to say, oh, so they were able to give 50 people lunch. That lunch cost us 2,000 per plate. But you must have an evidence that you actually did this, either pictorial or receipt, or some persons acknowledge this.
Okay.
You can work out as a company and go to a rural community around the FCT here where they are having difficulty with water, or a hospital. They don't have any hospital. You say, I want to build for you a small primary health care. And then you build. Probably in building that health care, you're carrying out the function of the government that they have refused to carry out. You are already helping in social responsibility.
Yeah.
Now, it becomes tax management because that is what a lot of companies are doing. They go and build in corporate social responsibility, a hospital that costs maybe 10 million, primary health care. Put up the structure, buy the equipment, get a nurse to kickstart. And then they go and tell you, oh, it is not 10 million we use in building this hospital. We use 15 million. What's the business of the people in the village there who had received? They don't care. Even though it's 100 million, whosoever is in charge there, we confirm that they build a hospital. If they say it's 50 million, it's 50 million. But in reality, what you have done, the expenses incurred by the company in building that primary health care center, it's 10 million. But you are now saying that it's 50 million. So, when you are being assessed, you say, oh, we built a hospital in so-so place. The hospital is there. You can go there and ask. When we're commissioning the hospital, there are pictures. This is the leader of the village. This is the head of the village. We had picture. They even wrote thanking us for being in hospital for them. So now it's not proper, but it's called tax management. That is why companies must keep record. You don't come and tell the tax authority, verbally, oh, this and that. You must keep records.
And keep evidences.
And keep evidences to show that. So when you do things for 5 million and you say, oh, it is for 50 million, for example, once the tax authority cannot dispute that, and the people who...
It will count against you.
It will count for you.
For you, okay, as against
that you have spent 50 million. So they deduct it from your profit. Instead of 10 million, they deduct 50 million.
Okay. So before we go, are there any consequences for failing to file tax or not filing at all? No, failing to file tax or failing... Are there any consequences of not filing your tax at all?
There are.
And not filing on time?
Not filing on time, there are punitive measures attached to it.
Okay.
Not filing at all, it's not proper. I advise people file on time, file as at when due, because I see a 2027 where we're going to have multiple tax prosecution in court.
Okay.
People who fail to pay their taxes will be prosecuted by the government.
Okay.
You can write it somewhere and wait till next year and see.
Okay.
From 31st of March 2027, you're going to see multiple tax cases, particularly on companies, high-ranking individual with good net worth and all of that. There's going to be prosecution. So people should pay their taxes. Companies should pay their taxes. It is a civic responsibility that we all owe the government. Let's pay. Okay. The government needs to take this money and then provide us with infrastructure.
Are there any penalties?
Yeah, there are penalties, myriad of them.
Okay.
If we start discussing the penalty now, we will not finish discussing them. Maybe
let's take a bit of it. A bit of the penalties.
Penalties ranging from deregistering your company.
Okay.
Facing prosecution.
Okay.
You can be prosecuted in court.
Okay.
You'll be taken to court. You'll be forced to pay. People can go to prison for 5, 3, 10 years, even depending on the amount that is involved. And then if you are shielding a taxpayer, there are penalties attached to it with even prison terms.
Okay.
Yeah, there are penalties.
Okay,
yes.
Thank you very much, Dr. Dominic, for bringing clarity to this episode. But finally, before we go, for persons who are not, let's say, you eventually go and pay tax and you are not satisfied with your assessment, is there room for appeal, or you just accept whatever comes out from your assessment?
You know, the new
law... Is there
law...
room for negotiation?
Yeah, there are rooms for negotiation. You know, the new law created what we call the ombudsman. It's happening for the first time in Nigeria.
Okay.
The ombudsman is created under the new law so that it's a neutral person.
Okay.
He's expected to talk to the government and also talk to the taxpayers.
Okay.
He's expected to resolve them and then ensure that the rights of the taxpayers are respected. The taxpayer also have his rights, and you cannot trample on those rights. So, we have the Office of the Ombudsman. Maybe if we're chance some other time, we can discuss specifically only the Ombudsman.
Okay.
His duties and responsibility, how he's appointed, and what he is to liaise between the government, that's the tax authority, and the taxpayers. If the government had overcharged you in assessment, you can approach the Ombudsman.
Okay.
The Ombudsman will look into it and approach the government and say, no, this taxpayer has been overcharged. If you have overpaid, we have situations where companies overpay their taxes. They ask the former FRS to refund, they refuse to refund. And we had matters in courts asking for refund. There's a company who paid extra from Lagos. They told the FRS at that time, we had paid extra tax. You have asked us to pay 15 million. We had paid 150 million because we added a zero. Can you give us back our money? They said, no, they were not going to give the money. They won't refund the money. This company went to court. They won at the Federal High Court.
Okay.
FRS appealed to the Court of Appeal. The company won at the Court of Appeal. FRS appealed to the Supreme Court, and the company won at the Supreme Court. So all these expenses and all the SANs and all the lawyers that are involved from the Federal High Court, Court of Appeal to the Supreme Court, whose money? These guys will go and take the money from taxpayers' money and pay from there. The millions that were spent in simple something that they expected to just refund.
Yeah.
You know, so some of these things is the reason why the new tax law brought about the Ombudsman. The Ombudsman is expected to, so it's not because NRS say, oh, you're going to pay 1 million and you cannot say anything, you will pay the 1 million. No, you have your rights.
There's room for negotiation.
If they overcharge you from your calculation, you can approach the Ombudsman. The Ombudsman will, it's like, that's why it is called Ombudsman. You sit, you say, oh, this is it. He will approach the government will say their own position, and then he will synchronize them and say, no, this is what this person is expected to pay. And the government is expected to take that amount and all of that. So they mediate between the taxpayers and the NRS. The NRS is the government, the federal government tax authority that takes tax for the government.
All right. Once again, thank you, Doctor, for bringing clarity to this episode. And that brings us to the end of today's episode. One thing is very clear, tax compliance is critical. Whether you're an employee, an individual, a business owner, or a company, understanding the different types of taxes, thresholds, filings, obligations, and practical steps can save you from penalties and legal trouble. Thank you to Dr. Dominic for sharing insights and helping us understand the 2026 tax reform in a very clear and actionable way. And to our listeners, thank you for being part of the LJE 360 podcast. I am Cecilia Memeh. See you in the next episode.